Hello, 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 traders. It's Friday, last day of the week, and we have one bit of information to deal with. It is the USD GDP report that comes out today at 8:30. It is estimated that the number should come in at 1.5%. If we come in line, we could probably see status quo and a little bit of consolidation, or maybe even a little strength in the U.S. dollar. But the interesting thing about this report is that if we consider the context of what if the Federal Reserve will ease more, we've had a recent downturn in the housing, labor, and manufacturing sectors, and it's become expected that the Fed will implement further quantitative easing in the upcoming weeks. So this report, that's why we've had such a high push up this week in the Aussie, Euro, and New Zealand because of fears of quantitative easing basically around the world. But so this report should be similar to the U.S. non-farm payroll report from May, where a strong number will be good for the U.S. dollar as well as U.S. equities, or a weak print will prompt a sell-off in the dollar and U.S. equities. So if we get a weak number, we could see the euro, the pound, New Zealand, and so forth continue to push higher. If we get a strong number, though, we could see if we get a strong number, we could see a bit of strength in the dollar. Let's take a look at a few of the majors right now, just to see how they're trading before, and let's look at a couple figures that we would take a look at in case of any run-up. You can see that the euro on a 4-hour is definitely flagging right here, just moving sideways, not losing any ground, basically sitting very near the initial pop yesterday was at 122.96. We're at 122.84 now. From this technical standpoint, it would look like we're going to pop higher on a bear flag, but this is going to be all driven by the GDP figure. So if we get a strong GDP figure, we could see a push down, maybe back towards the 128, 121.80 level. If it's weak, though, when there'll be more feeling of further quantitative easing, we can get a push back up, and the initial resistance level would be at 124.05, and if we break that, I mean, it could go back up to 125, but I doubt we're going to have another monster move like yesterday. So the initial support zone we'd be looking at is 124.05, but we need a break of 123.30, and then have to hold over that for at least 15 minutes before I'd be convinced. And 121.80 on the downside. The Great Britain pound, on the other hand, let's look at a 4-hour chart of that. The Great Britain pound continues to move higher. It broke yesterday's highs in trading and moved up to above the 157.70 level. If we get a pop today, the initial target I would expect to the top side would be, on a weak number, would be the 50 fib from the May lows at 157.82. Any move up to that level could probably find sellers, or at least it would stabilize out. But you have to take into consideration also that it's Friday, and on Friday, quite often when a trend begins, when we have a push higher, it'll continue to move higher or lower throughout the day, and normally close at the higher lows of the day, just because the markets will become thin during the end of trading, and it has a tendency to just go with the momentum in either direction. So we would have a resistance initially is at 57. Well, it would be at the highs here. It would be around 157.50, and significant resistance above that is the 50 fib at 157.82. Support on the downside would be about the 155.80 level, which I would guess, I'm looking at this, it also probably coincides with the 50 fib about 156. Let's look at the Aussie. The Aussie continues to move higher, still at support at 104.60. I still have support at 104.60, but broke higher above the day's highs yesterday. If we get a move down, I mean, the first level of support is going to be at 103.20. If we get a move higher, and let's see, I don't have it on my charts even. Didn't expect it to go this high this week. If we get a move higher this week, the first level of support will come in around 105.50, and 105.50 would be would be a level where we could have lining up with sellers. But we also have another level of support that would come in here, and this is probably more accurate. It would be the top of this channel that the pair has been riding so far, and that number comes in around 104.85. So I would actually say the top of the channel would be the more so 104.85. We could find if we get up to that level that sellers will come in, and we could push back down towards the bottom of the channel. Let's quickly do the other majors. New Zealand USD once again continues to move up. Is testing the top of its range at 80.60. This range is important because it's contained the pair over the last, as you can see, that it's contained the pair over the last month or so. If we get a break above this level at the 80.60, let's see where we could go. I have to go all the way out to a yearly chart here. 80.60. Oh, well, we will be back. I forgot I spoke about this last week. We will be back in the range from that we consolidated in it over 2 to 3 months in the beginning of the year. So the first strong resistance actually would be at 82.35, and we could simply consolidate in this range for quite a bit of time. So this is a pretty strong number here at 80.60, and if we break through that, we can expect definite range trading for the near term in the future. And if we go back down after a GDP number today, we could move down towards 80.60 initially, and then probably down to the 79.50 area. Let's round these majors off. The US CAD still in a trend channel. First level resistance is 10050, and then we have the channel resistance, which comes around basically 1.0016. Basically, I would be looking for parity if we have a breakdown to the downside. And if we break up to the upside, first we have to get 101, but we could get a move all the way up to the 101.50 area. The yen doesn't seem to want to go up. It's in a battle with itself. As I said yesterday, it's interesting. I saw that a report that said 91% of all retail traders are long the yen, and there's also a fear of intervention from the government because they had to just increase their war chest by $100 trillion to fight economic problems. $100 trillion, and the pair will, until the pair breaks below 78 or above 78.60, you'd have to consider this continued move sideways. Continued move sideways in the pairs for the near term. All right, that's the morning call. That's a quick rundown. Keep a look up on the Twitter feed at both the public feed and the private feed. If you are trying to log on to the private feed, I put a new page on the member section that shows you exactly how to do it. Basically, you just need to request, and I will accept you. And I will be updating numbers and levels throughout the day after the GDP report. Everything will probably quiet down around 11:30, maybe 1 o'clock, because it is Friday and the low liquidity in the market. Good luck trading, and let's finish the week out with a bang.